The leaves are falling, and so are rates. Hey, it's Eric Osnes here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending October 28th, 2022. Well, bonds took a week to cool off and correct themselves from the unjustified weakness we had last week. Friday morning so far wasn't quite as good, going a little bit negative due to some profit taking, but that's pretty much to be expected considering we had such a strong rally this week. The big statistic was September's PCE, that's personal consumption expenditures. That's the Fed's favorite measure of inflation. Came in about expected at 6.2%. That's up 0.3% from August, still rising. But about in line, so that no huge difference there. The core rate was up 0.5% to 5.1%, core rate excluding energy and food prices. Still miles to go before we hit the Fed's target inflation rate of 2%, though. Pending home sales in September had a rough month, falling 10% against expectations of about 4% drop. Sales for the year were down about 31%. Actually, in our local markets, about 38%, obviously impacted by our interest rates. Next week is Fed week. They meet on November 2nd, and they are expected to hike short-term rates another 0.75%. That's expected. It's already built into today's rates, so that should not impact mortgage rates that much next week. But the markets will be very closely watching the Fed's bias. That's their propensity for future rate hikes. They're looking for hints of softening from their aggressive stance. Even the United Nations reached out to central bankers this week and said, hey, slow your roll here a little bit. For the week, mortgage rates were significantly better. So here's the national averages. Conventional 30-year fixed rate, 7.04%, still over 7%, but down 0.33 from last week. 15-year fixed rate, 6.44%. That's down 0.25% from last week. 30-year fixed rate FHA and VA, 6.55%. That's down 0.33 from last week. And 30-year fixed rate jumbo, 6.05%. Those are down about 0.2% from last week. With all this talk about housing and with interest rates affecting affordability, many buyers are looking for solutions on how to improve their affordability or actually buy more home. I had several conversations this past week with my past clients where they would like to add a Dadu, a detached accessory dwelling unit to their property, but they don't want to lose that beautiful rate I gave them, a year or two ago, and I suppose who can blame them? An ADU is an excellent investment. It can give you supplemental income, give you space for guests, future caretaker, Airbnb, lots of different uses for an ADU. Zoning restrictions have been relaxed pretty significantly in most of our municipalities, making them much, much easier to build than they were even a few years ago. They can be detached from the home, that's Dadu, or your existing home can be modified, that's an ADU. If you're modifying your home, it does have to have its own separate entrance to get into the unit, as well as the typical, bedroom, bathroom, and kitchen. For first mortgages, even Freddie Mac will now allow rental income to be used to help you qualify with an ADU. If you need to finance your ADU, but you don't want to refinance your existing mortgage, a HELOC would be the answer. We can lend up to 90% of the value of your home, including your first mortgage balance. So it'd have to be enough equity there to do it, but that would certainly be a good tool to go. Homebridge has a HELOC program that is a fixed rate loan, so it's not subject to future Fed hikes. And our loan is really fast. It uses blockchain technology, so there's almost no documentation required. Closings can usually occur in as little as 5 days. Seriously, they're ridiculously fast. If you'd like to explore ADU options, just give me a call. I have personal experience with them. I'd be happy to run the numbers and give you any insight that I can on building one or managing one. And of course, I'm always available to answer all those other serious financial and mortgage related questions and story problems. Just reach out. You can call me 206-915-3742. That's 206-915-ERIC, or you can email me, eric at ericismybanker.com, or look for me on social media. Just look for Eric is my banker, and you'll be able to track me down. Hope that's information helpful for you for this weekend. Stay dry, have a great weekend, and I'll talk to you next week.